Good afternoon, everybody. We'll get started with our little introduction. Thank you for joining us at our Understanding Insurance for Contractors webinar today. We really appreciate you giving us your time, and we have an exciting presenter for you today. Just to begin, we're going to go over some housekeeping rules. To begin, if you have a question, either use the raise your hand feature or submit a question to our Q&A feature into the chat box as well. We'll be monitoring those constantly. So if you have a question, please feel free to type it in the chat or the Q&A, and we'll be happy to answer them when we have time. And be active participant in each session. And if you can, within your chat box or within your name, change your name to names-company so we get familiar with you and to make sure who we're working with and to help you out as much as we can. So no further ado, we're going to start the introduction with John Miller. You have the floor, John.
Okay, very good. Thank you, Jason. It's a pleasure to be here today. And I should also say that Ingrid Merriweather was originally scheduled to do this presentation, and she does it to a very high standard. As a fill-in today, I'm going to do the best I can. I have actually been active in the insurance and surety and lending industries now for 47 years, and I'm currently responsible for our contract-based finance programs throughout our network of offices, whether it be California, soon to be Texas, and in Charlotte, North Carolina. But I do have a fairly strong background in insurance, and I'd like to try to impart a few items to you today that I hope, from a high-level standpoint, will be beneficial to each and every one of you. And I would invite you to ask questions. If I don't have a ready answer, we certainly will get back to you. And as Jason may have mentioned, we will be sending follow-up information on this seminar for you so that you'll have a record of what was presented here today. Okay, next slide, please. Understanding insurance for contractors. As a preliminary here, I'd like to kind of define, if I may, the term insurance. It seems like a very complicated topic, especially if you're in the contracting field or professional services field. Insurance is really nothing more than a guarantee of compensation to a third-party insurer in exchange for a premium. Policies can be very complex in their nature, with declarations and different coverages described and exclusions and conditions and this sort of thing. But at the end of the day, it is risk transfer that as a business person represents an opportunity to protect the assets of your businesses as you're essentially growing them and contributing to retained earnings. The cost of insurance is far less than the exposures that you undertake by way of the contracts that you sign every day if you're in the contracting arena. Next slide, please. Okay, so from a practical understanding standpoint, what we've done is we've narrowed down the type of coverages that you typically see or are required of you by contract. The three coverages that you're going to typically see are first-party coverages, where essentially you are buying insurance to protect your assets, buildings, personal property, tools, equipment, that sort of thing. The second type of coverage you're going to see, again, typically required by contract, will be third-party coverages for bodily injury and property damage. Essentially, when your negligence is alleged in an incident, this coverage would typically take care of the bodily injury or property damage to third parties. And from a workers' compensation standpoint, if you're in the contracting industry, you're seeing workers' compensation being required in whatever strategic market you happen to be in. And this is compulsory insurance that we'll talk about. It's mandatory, and it's there to cover medical costs and lost wages to your workers who are injured on the job. So those are the three kind of types of policies that, from a practical understanding, we focus on, even though we'll talk about a number of other policies here as we work through the presentation today. Next slide, please, Jason. So we're going to cover These policies that are listed here, these are obviously part of a universe of a whole bunch of different types of insurance policies that you could be looking at and working with your insurance agent or broker, or in the case of the folks in Charlotte, North Carolina, your insurance producer in that strategic market. Commercial general liability policy, that is a third-party coverage. You're going to see specifications for CGL embedded in the contracts that you sign. We'll talk a little bit about how those specifications break down later on in the presentation. Obviously, workers' compensation that I mentioned a little bit earlier. Auto liability is typically required in conjunction with the contracts that you sign. We'll talk some about contractors' equipment floaters, and I'll make a comment or two about what we call an installation floater as well. Professional liability insurance, depending on the type of work that you do, it may be something that you, in working with your insurance professional, want to consider. It's also known as errors and emissions coverage, and you may be actually required by contract to bring a level of professional liability insurance to the projects that you contract for. Builder's risk insurance, obviously insurance to cover the physical structures that you're working on during the course of construction, either brought by you in the form of a project specific or a annual reporting form builder's risk insurance policy, or it can be provided by the project owner, or if you're working in a subcontracted position, by the prime contractor. And then we'll comment a little bit about owner-controlled insurance programs, OCIPs, and contractor-controlled insurance programs, CCIPs, a little bit of the ins and outs on each and every one of these types of insurance. And again, this is not intended to be a super deep dive or comprehensive dive on all the aspects of these types of policies, but to generally make you aware, if you haven't already encountered them, what you really ought to be drilling down on with your insurance professional. Okay, next slide, please. Okay, in the realm of standard insurance requirements contractually, your commercial general liability, you're going to have limits that are stipulated by either a project owner if you're working in a prime position, or by a general contractor if you're working in a subcontracted position. And we see the insurance sections on contracts that we're involved with the small business enterprises that we work with typically minimum general liability per occurrence limits of $1 million, $2 million limits in the aggregate. Now you can buy higher limits. The economics of buying higher limits is going to be entirely up to you and what you and your insurance professional deem to be your exposures as an individual business. But typically we're seeing 1 million per occurrence, 2 million in the aggregate. And as a standard aspect of the insurance that you're required to provide on these projects, you're going to provide a certificate of insurance, which will typically name the owner, if you're operating in a prime position, as additional insured under your policy, or if you're operating as a subcontractor, naming the general contractor as an additional insured under your policy. Now, coverages under a commercial general liability policy typically include, obviously, as I mentioned before, bodily injury, third-party bodily injury, third-party property damage, BI and PD as respects the products that you produce as a contractor and the completed operations of those products. You're going to have personal and advertising injury included in your general liability policy. Not too many, we don't see too many claims in that area, but personal liability would be for things like libel and that sort of thing. Advertising and injury might be something like copyright infringement or advertising mishaps. Medical payments are also covered under these policies. Okay, next slide, please. Now, in the commercial general liability area, you can also purchase what is called an umbrella or excess liability policy that sits above the underlying limits that you purchase. These higher liability limits are going to be naturally less expensive than the underlying coverage, but they do provide you coverage for catastrophic losses, both on a per occurrence and on an aggregate basis. These umbrella policies can also sit over the commercial auto liability policy that you carry, depending on how your program is structured. Now, underwriting is pretty simple and straightforward. There are some other nuances to the underwriting, but it's basically your loss history as a contractor, the type of work that you do, and being able to accurately describe that to the insurance professional that you use, and also to the carrier that would be providing the coverage for you. And of course, the cost of the insurance is based upon either a payroll basis or an annual gross receipts basis. Okay. Now, in the exclusion area, what we do ask the small business enterprises that we work with who are breaking into the business and maybe doing a combination of commercial work as well as private and residential work, to make absolutely certain that the policy that they buy does not exclude residential, townhouse, or condo type work of any kind. And these limitations could be a recipe for disaster if again, that type of work weren't properly explained to your insurance professional so that the exclusions would not be in your policy. Okay, next slide, please, Jason.
A quick question from the audience.
Yes.
From Jennifer, does the cost of insurance impact my estimate, and how do I include it when the owner increases the insurance requirement?
Yeah, okay. So the cost of insurance is definitely included in your estimate. And the best time to address that, obviously, is in the early stages of bidding the project and making absolutely certain you know what the insurance requirements are likely to be on the project, but also having a protocol for distributing or burdening, for example, your labor wage rate. Burdening your labor wage rate, your base rate, with the cost of workers' compensation insurance per employee, burdening your labor wage rate with the impact of state and federal taxes on those labor wage rates. And fringe benefits is another key that needs to be worked into that burdened labor wage rate. With respect to allocating the cost of your insurance program overall, typically contractors who have a substantial backlog of work will view the cost of their general insurance as a component of their overhead to then be allocated overall to the project. But that fully burdened labor is a really important component that needs to be considered. And as you are working with our contractor development managers, our field support services team has a great way of coaching you on how to work your way through properly burdening your labor component with additional costs. And actually, when we're working with you on contract-based finance, we also will review that with you when we're doing cash flow projections. And there's another question from the floor. Can you please go over exclusions again? Well, the only exclusions that I've mentioned so far are common exclusions that we see in a commercial general liability policy that would impact some of the small business enterprises that are just breaking in to contracting. They may be straddling both the residential market as well as trying to break into the public works market. So exclusions that we see in a CGL policy, unless you and your insurance professional are focused in on the type of work that you'll be doing, will be typically residential type work, condo and townhouse type work. But all of the exclusions should be reviewed by you and your broker and just compared to the type of work that you're out there actively bidding in order to determine what their potential impact is going to be. Okay. Hope that answers the question. And if there's a follow-up, I'm very happy to address it. Now, workers' compensation insurance. this is a broad topic, and since we're really kind of discussing this over several states, what I would tell you is that both in the state of California and in the state of North Carolina, workers' compensation is, of course, mandated by law, and statutory limits are mandated by state. Now, I don't believe employer's liability is required in North Carolina, but it certainly is required in the state of California. And the statutory limit for employer's liability in the state of California is $1 million. Workers' comp is a distinct area of expertise that your insurance professional needs to have. Let's see the question here. As a small business and new construction company, how would you help us to be eligible for bonding? Well, I'll be happy to get to that because we do have surety, quite a surety team on staff, and we can help you navigate the early stages of getting qualified for bonding. So hold on, Jason, don't let me lose that question if I get a little bit down the road here, okay?
Will do.
Okay, thank you. Okay, so on the workers' compensation, and this is really what I wanted to kind of focus on today. Your insurance professional, how do you know when you have too much coverage? Well, when it probably is priced out of your reach, and or a good look at the type of work that you're doing would indicate that you don't really have that magnitude of exposure. That's about the best way I can answer the question. I think $1 million in the aggregate, or $1 million in the in a single loss limit on a general liability policy, and $2 million is pretty much the standard we see. But you can buy increased limits that does not have a huge cost impact, but it really depends on what your risk tolerance is. If you are new in business and you have not a lot of assets, not a real strong balance sheet, and can't withstand significant losses, then you're going to want to look at what you can afford in the way of insurance in order to try to protect what limited assets you have. So as time goes by, you may buy, depending on your situation, you might buy lower limits or higher deductibles, or retain a certain portion of your exposure. But again, a good solid insurance professional, which by the way, our teams in each one of our strategic markets can recommend to you, is best equipped to talk to you about adequacy of limits. An average EMR rating. Well, we'd like to think that they're all credit ratings, but they're not always all credit ratings. If you're new in business, your loss experience, your EMR is very likely to impact to some degree your competitiveness. Most contractors who are new in business do not have a track record of solid safety performance. They have no track record at all. So they'll end up with what is called a debit rating, which increases. In other words, if you've got a standard rate for workers' compensation of $100, your debit rating might put you at $110, which does present a competitive disadvantage to you as a small contractor. Oh, are there background voices speaking? Jason, are there background voices there? I'm not hearing them.
Not that I know of.
Okay. Yeah, I don't hear anything. I apologize for that. And Shane says that they don't hear anything either. No background noise. Okay,
there is a question. What is the average EMR rating?
Well, yeah, and I really can't speak to the average. What we'd like to say is that the better your safety history is, your losses under workers' comp, the better your EMR is going to be. It's either going to be debit rated if you have a poor history, or it's going to be credit rated. And if you can get it down below 100 into the low 90s over a period of time, that's going to benefit you greatly in terms of your competitiveness. Workers' comp. I'm not quite sure. I didn't catch that question. Jason, did you see the question that preceded this one?
From Thomas is we don't have injuries. Why would I pay more for workers' comp?
It's you know, that's going to be entirely dictated by the carrier that you're working with. Okay. I wouldn't attempt to justify either a debit or credit rating to you. other than to say that both of them are affected greatly by your loss history or the lack of a history. If you're new in business and you don't have a loss history, you're very often going to be stuck with a debit rating during the early stages of your business enterprise. So the watchword in all of this is take advantage of what resources we have in Meriwether and Williams and through your insurance broker and the carriers that you might work with to take advantage of what safety programs they offer. As a subcontractor, you will be asked to participate typically in the general contractor's on-site safety programs. And certainly project owners are acutely aware of the importance of job site safety on the projects that they're having built out. So whatever you can do to stress safety amongst your employees is going to be a long-term benefit. On commercial coverage, I didn't quite catch that question either. I'm kind of looking at the presentation and trying to catch the questions as they pop in there. Who is State Fund and how do I get involved? Through your insurance broker is how you get involved with the State Fund, okay? Now, going back to the COVID pandemic, where COVID was presumed to be contracted on the job site that was covered under workers' compensation. I imagine it still is, but I'm not quite up to speed on that. Again, your producer can give you an idea as to whether or not COVID is covered. And the most impact that in this type of insurance loading goes that goes into the bids, as I've stressed, I think pretty heavily here, is that if you have good experience, you have an automatic competitive advantage. If you have bad experience, it's going to be harder to compete. It was state fund, a state program, private insurance. The state of California has a state fund that provides workers' compensation insurance. There are individual carriers that also provide workers' compensation insurance, depending on where you're domiciled. Okay, next slide, please, Jason. Auto liability. This is typically going to be required in conjunction with the contracts that you sign as well. We typically don't see limits. Anything, you bet, Kenneth, I'm happy to help out. We typically don't see limits required any less than $1 million per occurrence. You'll want to schedule for excess liability and catastrophic losses over and above your auto liability. That's just a good risk management practice. And the umbrella policies that I described earlier can drop down both over your comprehensive general liability as well as your auto liability program, depending on the insurance company that you're working with. You'll want to make sure that owned and non-owned autos are scheduled on your auto liability insurance policy. The underwriting, as you can well imagine, is pretty straightforward. That schedule of vehicles needs to be comprehensive and constantly updated as vehicles come into the organization or are returned, depending on whether or not they were leased or hired for on a specific project. Gross vehicle weight comes into the rating on these policies, and of course the value of the vehicle as well has an influence on the cost of this coverage. You'll want to be able to also identify the number of employees that are driving non-owned autos, so that you'll make absolutely certain that you have coverage on those non-owned autos so that you're adequately protected. You can't really rely on them to carry the type of insurance that is necessary to protect your business. A lot of contractors, this carries a different terminology depending on where you are in the country, but there are what are called pull programs, where for a modest fee you can sign up with an agency that will help you run Department of Motor Vehicle reports on the drivers that you hire, and make sure that you are maintaining a standard on those motor vehicle reports that is consistent with the expectations of your insurance carrier. Okay. And your insurance carrier may actually pull those reports as well. And I missed the last question that popped in there. I want to be kind of comprehensive about this. Jason, is that
Yes.
something you could read back to me?
Yeah. Is it better to bundle your insurance or should I shop around for the best pricing from different agents?
You know what I would do? I would identify, and if you talk to your competitors, if you have any kind of a competitive network or an association that you belong to, whether it be maybe the AGC or NAMAC or whatever it might be, uh, people who have great insurance professionals like to recommend them. And I think that you can do just as well working with one insurance professional who truly understands your business from a pre-construction standpoint, from a course of construction standpoint, and from a post-construction standpoint. You can do just as well with an individual that understands all of that as you can by going around and trying to buy these policies independently from various sources. So that's what I would recommend. And actually, again, I'll say our network of contractor development managers, we work with brokers who are construction savvy, both from a bonding and from a construction insurance standpoint, and would be very happy to provide referrals to you along those lines. Okay. Next slide, please. Okay, the contractor's equipment floater. This is essentially first-party protection for the equipment that you own or lease and the tools that you own or acquire on a per-project basis. It covers that equipment at your normal domicile, in your shop facilities, in your storage yard. It also covers this equipment when it's out in the field. You're going to encounter certain requirements for securing the equipment. It should be in a locked premises, so on and so forth. But the contractor's equipment floater does just that. It floats with the equipment on whatever site it's on, okay? Typically, these policies are written on what's called a replacement cost basis as opposed to actual cash value. Not inconsequential. It's an inland marine form, which basically it covers your property anywhere at any location. These policies may include catastrophic coverage for damage to equipment due to earthquake. But here again, just like your auto liability, you want to carefully schedule your equipment, making sure that you're including everything that you have and update it regularly. Provide those lists to your broker and make sure that that is all properly communicated to your insurance carrier. Underwriting is again straightforward. It's dependent on your losses, which are going to be reflective in many instances of how well secured you have the equipment off-site, and also the value of the equipment is really an exponent then of the rate that's charged for the equipment. So a little bit on the contractor's equipment floater. I'll also mention, even though I'm going to go to a different type of coverage in the next slide, that we recommend something called an installation floater to many of our contractors. If you can imagine, you're a contractor who's installing perhaps HVAC equipment. You order the HVAC equipment, it's delivered to your premises, and then you deliver it to the job site for installation. The installation floater will provide what's called transit coverage. You have transit coverage for that equipment as it leaves the manufacturer and comes to your site. So it's fully insured at the point in time that it hits your site. It's covered essentially under your permanent insurance on your at your site, or your property insurance policy. But then when you transport it, the installation floater provides coverage while that equipment is in transit. And the other advantage of an installation floater is that when you arrive on the site with that piece of equipment and you pick it to put it on the roof, if you drop it, Your general liability policy will cover third-party bodily injury and property damage. God forbid it land on somebody or a piece of someone else's property, okay? But the actual piece of equipment that you're picking may or may not be covered, depending on your the type of coverage that you're carrying. So that's called care, custody, and control. And the contractor's equipment floater, the installation floater, for a very, very small premium, it removes the care, custody, and control exclusion that is typically in your general liability policy. So I mentioned that, and this comes up very often in loans that we do for contractors, the need for an installation floater. Okay, next slide, please.
Yeah, quick question, John. Can the equipment floater be included in the umbrella coverage?
That's a good question. The umbrella coverage is typically third party. So you're going to want to make sure that the equipment floater and any permanent insurance you have on your facilities, anything that's there to protect your personal assets, is properly structured in terms of the value of those assets. I'll tell you, Jason, if we could save that question, I'll definitely follow up on that and see whether or not. But the rule of thumb here is it's umbrella liability as opposed to your own assets. So I think the answer is no, but I'll get clarification on that. Okay. Okay, professional liability or errors and omissions insurance. We mentioned this because depending on the type of work that you do, as you describe it to your insurance professional, there may be a need for professional liability, or professional liability insurance might be driven by a contract that you sign where you're asked to bring a professional liability policy. Now, unlike the property insurance policy that you carry on your equipment and on your facilities, which essentially indemnifies you for loss to those assets, and the commercial general liability policy, which that protects you against claims by a third party against your assets. This professional liability is there to pay for your errors and omissions on your behalf should you make some sort of an error or omission in the management or consulting, design and engineering on a project where you are directly responsible for that. This coverage is not something that a lot of the small business enterprises that we work with are required to provide, but they may end up named on a policy that is purchased by a project owner or general contractor. The limits are dictated by the project owner or prime consultant. Typically, there are no less than $1 million, and again, you might be named on such a policy. It can be project specific, that means bought for a specific project, or it can be a practice policy. Engineers and management, construction managers will very often carry this type of insurance policy. The thing to remember about this policy, every policy from a third party standpoint that I've described so far are what we call occurrence-based policies. That means that the coverage essentially is there for you at the point in time that the loss is determined to have occurred. But on professional liability policies, they are what's called claims made. So under these policies, if a claim is going to be made on the policy, it has to be made during the policy period. Otherwise, the policy expires retroactively. Now, there is such thing as a tail on these policies that I would encourage you, if you're required to, or if you think you need to carry this type of coverage, to talk to your insurance professional about. As long as you have the coverage in place on a continuous basis, I don't believe there's a need to add a tail, but again, it's something that a professional in that particular area of risk management can help you with. Okay, next slide, please. Okay, builder's risk insurance. This is essentially coverage for the property that you are working on as a contractor. If you're doing a remodel on an existing building, that building has what is called permanent insurance on it. That portion of the structure that you would be working on would be covered by a different type of policy, which is a builder's risk insurance policy. And then at the point in time that that remodel was done, that policy would transition into the permanent insurance program of the project owner. Okay. Builder's risk is something that can also be written on, when you're just coming out of the ground on a project where there are no existing structures involved. Okay. And it can be written on a project specific basis, or it can be written on what is called a reporting form basis. And it essentially, like I say, covers damage to a structure under the course of construction, including loss or damage to materials intended to be part of the building. So if you have a fire on the structure that's being erected and there are materials and supplies that are adjacent to that get damaged in the process, the builder's risk insurance will respond to that portion of the loss as well. Sometimes a project owner or a general contractor, if you're working as a sub, will provide the builder's risk insurance, which you want to be named on, and your insurance professional can walk you through how that should happen, and it also may be outlined in your contract. This type of coverage is something that is absolutely essential to the construction process. Without this coverage, permanent insurance does not anticipate the risks associated with the course of construction. So builder's risk is a very important component to your program, whether it's provided by somebody else and you're part of it, or whether you bring it to the project. I would also tell you that your insurance professional will look at if a project owner is providing builder's risk, or a general contractor is providing builder's risk. They will look at the coverage provisions in that policy. And if you are already carrying builder's risk, they'll look to make sure there are no gaps in coverage between what you carry and what they carry. And if your policy actually exceeds, in terms of the type of coverage that you carry, what the owner carries, then your policy, with just some slight tweaks by your insurance professional, could be called upon to respond if you had a loss on the site. That's something that's called difference in conditions. So, I can't stress enough throughout this presentation, and I hate to sound like Johnny One Note here, but I can't stress enough that this really becomes a discussion between you and a trusted advisor in the insurance area. Your ability to get great pricing on builder's risk is going to be tied to your loss history, the nature of the work that you're performing, construction values, how high cost or high priced the work is that you'll be performing. And it does cover not only the hard cost of the work that you're performing, but it also covers soft costs, things like debris removal from the site. The building burns down, there's going to be a separate limit for debris removal. And it may also, in the case of an owner purchase, provide costs for the owner to keep whatever debt they have on the project, if they've got a loan on the project, current through soft cost coverage. Okay. All right, next slide, please. Okay, so just a few additional comments on the builder's risk here. You want to read your contract very, very carefully to see who's responsible for bringing the builder's risk and whether or not you have an exposure that isn't otherwise covered by a policy that's brought by the project owner or the general contractor. Okay. Under the builder's risk, what are they specifying in terms of coverages? Quake, flood, water damage, mold. These are all key questions to be asked and looked at. As I mentioned earlier, if the project owner or prime contractor is bringing the builder's risk, you want to be part of the named insured on that policy. And the contract may stipulate a waiver of subrogation, disallowing the builder's risk carrier from pursuing a responsible party. If you're carrying builder's risk, and you have a clause in your contract that is a blanket waiver of subrogation, especially with respect to the builder's risk, that means that essentially if something happens to the project that isn't your direct responsibility, your carrier is going to be barred from subrogating or stepping into your shoes and recovering from the other insurance carrier. Your builder's risk carrier may actually charge an additional premium if a waiver of subrogation is there. They may not, but my point is here that when you read your contract, be careful to review clauses associated with waiver of subrogation and for its impact across the board. Okay. Next slide, please. Okay, we're going to touch on owner-controlled insurance programs and contractor-controlled controlled insurance programs, or wrap-ups. You know, this type of coverage for a project on a project-specific basis has been popular for about the last 30 years now. Project owners and general contractors have embraced the concept of providing project-specific coverages for general liability, builder's risk, and workers' compensation for a couple of reasons. Number one, they feel like they can control the cost a little bit better of the coverage. They can control aspects of uniform safety practices, standards of safety practices on the project. They also are purchasing what would be intact limits. They don't have to worry about whether or not a contractor is bringing what would be impaired limits to the project, which I didn't really talk about earlier. But if your underlying insurance limits are eroded by losses, especially in the general liability area, you do have the ability for additional costs during the policy period to get those limits reinstated, subject to individual carrier conditions for that. Is there an assistance program for needed insurance to keep working? I'm not quite sure. Was it Barbara? I'm not quite sure exactly what your question is there. Can you maybe rephrase it for me? Sorry.
Then we have another question from Kenneth. Are you saying
Yes.
I should be a named insured on the prime and my subs?
Well, depending on the type of coverage. Now, you are going to have to provide a certificate of insurance to meet the insurance specifications in the contracts you sign. That's sort of the baseline assumption. Okay. If the project owner brings insurance coverage to the project, you're going to want to be named as under that policy as well. I hope that answers the question. But do not surrender or give up, and you may be required by contract not to do this, whatever insurance you're carrying. In other words, you continue to carry your insurance, but you then become the subject of the insurance that's specifically or specified for the project by either the owner or the prime. And by the way, you will get safety or loss experience credit for the project just as if it was under your own insurance program. And that's important for not only your own program, but for obviously for your workers' compensation debt or credit rating going forward. So as the second point in this slide points out, in a controlled insurance program, you're going to want to continue to show evidence of off-site general liability and workers' compensation. Yes, insurance has doubled in price with a low bid to work. Actually, you'll be asked to bid net of insurance on an owner-controlled or contractor-controlled project. So you don't include the cost of your insurance on that. That just continues to be your own overhead cost. If you are asked to name the prime contractor as additional insured and you are bringing your own insurance to the project, yes, you will be asked to name them as additional insured. If you are not bringing your own insurance to the project and going to be the subject of either a prime contractor controlled insurance program or an owner controlled insurance program, you would want to be named on those policies and would be named. And again, you're not doubling up on your cost of insurance because you're not actually including the cost of insurance in your bid. You're not able to bill them for it. Coverage under these policies applies only to the site that you're working on with the project owner or prime contractor. So you do your bid without insurance loading. You're going to be responsible for any deductibles under these policies. And you want to carefully calculate your normal insurance load as it may be deducted from your bid. And you can get help from your broker or insurance professional in this. I think you can also look to our field support services team for some guidance in this area. Okay. All right, next slide, please, Jason. Okay, so a little more on the OSIPs and the CSIPs. You'll be informed of coverage limits and terms, okay? You want to compare that to what you cover, your standard coverage, okay? You may be required to submit insurance rating information to validate your insurance credit. Your insurance professional is going to be skilled in working with the insurance consultants on an owner-controlled program. This is not going to all fall in your lap. And so that can be something that you can get assistance from a good, solid insurance professional in. Now, owner-provided coverages should be excluded from all change orders. That would only stand to reason. If you are required to respond to a field directive change order, or whether you are submitting a change order based upon your contractual right to do so, because the insurance component of your job cost estimate is covered by a controlled insurance program, you would submit that change order net of insurance. And if workers' compensation is provided, you will have to provide a monthly payroll. You provide monthly payroll reports to either the prime contractor or the project owner. Okay. Next slide, if you will, please. Okay, so as I mentioned a little bit earlier, your workers' compensation losses will be included in your own statistical data, and we hope that that would work to your benefit. If I have a great loss history evolving, then that will work to your benefit, okay, and impact your experience modification rating. Attached to the contract on a project that is the subject of a controlled insurance program is a manual. And you'll want to go through that manual. Sometimes that can be a little laborious, but you'll want to put that manual in front of your insurance broker and say, I need some guidance in understanding exactly what the implications of all of this are, and what can you help me with in terms of navigating this program, okay? So you, and very often I think I notice a separate signature line on those manuals that come through. You may have to participate in mandatory project safety programs. Well, that might be on projects where there is a controlled insurance program or not, whether you bring the insurance or not. If you're operating as a subcontractor to a prime, you very often are tied into mandatory safety procedures and practices and meetings. You're going to need to also maintain compliance with the requirements that may affect progress or retention payments. In other words, make absolutely certain that when you look at the pay application process, you look at it not only for how you prepare your pay application, whether it be an invoice or an AIA 702, 703 form, whatever that might be, but also any implications with respect to reporting, as I've kind of previously noted in this slide, reporting under the controlled insurance program if one is in place, because you don't want your pay application held up on a technicality. Okay. Next slide, please. Oh, we're at questions and answers. Well, I'm very happy to take questions now. I hope this has been beneficial to you. It was designed to be a very high level sort of a pass. And I'll just open the floor.
Yeah, thank you again, John. If you have any questions, please feel free to put in the chat or the Q&A section. We'll give a few minutes for anyone that has any questions. If not, then we'll move forward. So please take your time. Thank you again, John, for an amazing presentation and the knowledge that you shared.
Well, it's a pleasure, and I hope I met the standard that Ingrid Merriweather typically does in these presentations. I know that she does them quite frequently, and would have been here today if she wasn't otherwise disposed.
We have a question.
Do we have a question? Okay.
Yes, we do. Sorry,
Okay,
does Merriweather offer liability insurance?
We do. However, we typically in our programs will work with outside insurance brokers. We are a full service insurance broker in all of our operations. Okay. But when we are doing sponsored programs in San Francisco and Los Angeles and in Charlotte, we're typically working with trusted advisors and insurance professionals on a referral basis where you're concerned. And I can't stress enough, I think I mentioned it earlier in the presentation, one of the ways to find a good insurance broker is to find out who your competitors are using. That's probably the best telltale sign. Same thing applies for surety bonding. And I believe we had a question with respect to bonding. And I'd like to address that as best I can here. The same thing applies to selecting a surety broker. Now, some construction insurance professionals also act as surety brokers and agents, and can be very, very good. Very often our contractors are working with a construction insurance professional on one side and a surety broker or producer on the other side, because they are two fairly distinct disciplines where you have to have pretty discrete knowledge. In those strategic markets where we can provide sponsor-funded guarantees, surety bond guarantees, to help you collateralize bonds that you may be required to provide in conjunction with the contracts that you're signing. We will work with you to access those guarantees, and we have a team internally that coordinates that with your surety broker or your insurance broker, and that's a very robust area that we operate in. We provide a lot of these guarantees. It's part of our equity of resource program, whether it be to provide you equity of resource and trying to navigate the ins and outs of your everything from your certifications through understanding what your insurance program is about, but also being able to provide you equity of resource when it comes to having to collateralize bonds in order to qualify for a bond or to qualify for contract-based finance, which is the area that I typically work in with Merriweather and Williams. We can provide working capital loans for you that are project specific. It's a whole discrete process of its own, and I'm sure at some point in time, if we haven't touched on that subject with some of you, we will be in a very short period of time. I think actually, don't we have a Finance 101 coming up in late September, don't we, Jason?
Yes, we do. In about a month, we have another workshop just like this, including Financial 101, presented by the very own John Miller.
So you'll have me again, and this is an area that we've been operating in for not quite 6 years now, and the program is operational in all of our strategic markets and getting bigger every day. So very excited about presenting the possibilities of participating in that program to each and every one of you who are on the meeting today. Anything else?
All right, thank you for that, John.